Alright guys, so this is part one of OnlyFans Creator to a Day Trader. And some of you might be new, you don't understand trading, but you want to see how this journey goes and if it really works. So pretty much what I'm going to do is just prove to you, just with a few months of dedication and hard work, you can actually make things work. And what I've got on my screen here is stuff that I've documented from learning. So I do have a bit more knowledge than you actually think, because I can't just go in blindsided, you know. Like, I do need to understand things, obviously. So the things I'm about to show you on the screen are things that you definitely do need to know. So your candlesticks, for example. So always let the candlesticks form to know what the markets are doing. For example, a strong bearish candle with a small wick on top and a bottom means strong sales in the market. However, if it's a bullish candle, has a small wick on top and a bottom, that means market has strong buys currently in the market. These can be known as engulfing candles. If you don't know what an engulfing candle is, pretty much this right here is an engulfing candle. So you're probably wondering why my colours are this. So my blue is actually my sells. Obviously it's got a small wick on the bottom, a small wick on the top, but it's a sell. It's an engulfing candle. It's just showed us the markets want to go down. But then you have them for buys as well. So my grey are my buys. So they're the bullish. Bullish is where you want to go up. Bearish is where you want to go down. And understanding wicks as well. Wicks are where the markets have been before, close, and tell you where markets are going. They don't lie to you. And these right here are candles that you definitely need to know. So your dojis, your doji crosses, your inverted cross dojis, inverted hammers, hanging man, dragonfly dojis, and gravestone dojis. They are your main candles you definitely need to learn, because they really do show you where the markets are going, because dojis change directions in the markets. For example here, this is supposed to be a doji bullish, by the way, but that's a doji bearish. It can show you it had a doji and it's shifted the markets. A doji bearish, I mean bullish, it shifted the markets upwards. So now you understand that. Please read over this again and just get it locked in your brain, because it is definitely something you need to know. And these are another things, guys. Trends. When a market structure shifts, that means the charts are trending. This tells us where the markets are going. When markets are bullish, this means they're going to move in higher highs and higher lows. When the markets are bearish, this means they're just going to move in lower highs and lower lows and lower highs. Sorry, guys. When markets are consolidating, this means they're just moving in a sideways direction. It's quite easy to tell. Usually consolidation just happens in Asia session. You don't really want to trade in consolidation. I wouldn't recommend it. London and New York session are definitely the ones that you want to trade, because they've got more volatility in the market and show you where markets want to go. To check what trends you're in, always check the higher time frame, because they show more than the time frames that are on a lower. So a 1 minute, your 5 minutes show like a downtrend, sort of bearish. If a 5 minute and a 1 minute are showing down, but a 4 hour or a 1 hour is showing you a bullish trend, do not be looking for sells. Do not be looking for sells. You want to be looking for buys, because your higher time frame shows you more confirmation than your lowers do. Pretty much never trade against your trend or bias. The trend is there to guide you where the price actions are going, guys. Markets move in three ways: bullish trends, consolidation, and bearish trends. We pretty much just went over that. Check the daily to see where the price action wants to go, or check the 4 hour. So daily and 4 hour are your best friends in the market. They show you where you need to go. We're trading intraday trades, not quick in and out trades. We want to see where price action wants to go on a high time frame and be able to enter and execute on the lower time frames. So what I'm trying to explain there, guys, is you want to look at the 4 hour, your 1 days, your 1 hours, and see where market want to go. If it's looking for a bullish, like if it's going bullish on a higher time frame, on your lower time frames, on your like 1 minute, your 5 minutes, depending which one you prefer, you want to execute. So you want to be getting it in on them. So on your 1 minute and your 5 minute, you want to be looking for a bullish order. So for example, I'll get into liquidity, but say we sweep bearish liquidity and we've had a market structure shift, which I will get on as well. We could end up going to a fair value gap, for example. I'll get onto that as well, which if we reject off that fair value gap, pretty much we're getting to buys from there on a lower time frame. It just shows more confirmation. Check the daily to see where price action wants to go. Oh, I've already read that. Market structure shifts. Right, this is what I just said. When bearish for a market structure shift, you want a closure of a bullish candle above the lower high. Okay, guys? So when bullish for a market structure shift, you want a closure of a bearish candle below the lower high. High lower. Okay. Oh, okay. Only care about the recent higher low and the lower high. Okay, guys, that's pretty much what you need to know about market structure shifts. I'll give you an example, because some of you will be thinking, what are you on about? So this is a really good market structure shift. So as you can see, we are currently in an uptrend, and this is on a 4 hour, by the way. So it shows confirmation that this has shifted the markets. So as you see, we're going higher high, higher lower, higher high, higher lower, higher high, higher lower, higher high, higher lower. But obviously that was the last low it was. And we shifted the market because obviously this was still going up. You'd expect this to go break through that. For example, where's the pen? You would expect something like that, but it broke structure instead. What I mean by that is this was a recent low from that candle. We thought, okay, we're gonna go above there, but it didn't. This candle right here actually broke through and it closed on it. So this candle closed below that, which means it's a market structure shift. That's showing us that it wants to go bearish now, so we are looking for sells. So when we're looking for sells, because this is broke market structure, we would drop to a 5 or a 1 minute and we'd be looking for executions. Right here, for example. Let me get over there. So as you can see, that was the recent low. As you can see, we broke market structure shift. We'd be looking for sells pretty much, guys. On a lower time frame, it looks quite mad, that I'll be honest with you. It's not a great thing to look for on a lower time frame. But yeah, that's a market structure shift. Oh god. So they're your market structure shifts. That's what you really need to know about them. Only care about the recent higher low, lower high. I've just said that. And your risk management, okay? So risk management is a massive thing in trading. This is where everyone goes wrong, because with risk management, a lot of people blow their account because they don't fully understand it. But pretty much what I'm going to tell you here, you should be risking 1% to 3% of your account size per trade. Why are you doing that? If you're risking 1% of your account, you would have to lose 100 trades in a row to lose that whole account completely. Pretty much. But if you're risking like a 3 to 3, you know, you're losing a lot more than you would be with a 1%. So, for example, if I went on my trades and say I just found a random long and it was a, I don't know, 1 to 2, okay, so that's that right there, that's a 1 to 2, so I'm risking 1% of my account there, and then if I get TP I make 2%, but you usually want to be looking for like a 1 to 2 to 1 to 3. You could do a 1 to 1 risk to reward, however you're not going to be making as much as you want, so be definitely looking around 1 to 2 to 1 to 3. So you're risking 1% to win. You want to be risking 1% to win 2%. And why is that? Pretty much, if you win that trade, but tomorrow you do it again, but you lose that trade, you haven't lost all. But say if you do 3 to 3, you're losing 3% of your account if you lose that trade. But the next day you do a 1 to 3, you're still down 2%. So So definitely always stick to a 1% of your account. Um, and what is a fair value gap? This is what I'm on about, guys. This is where I was just speaking about. These are like really important in the markets as well, because it tells you where markets have liquidation. And usually with liquidation, the markets will always go back there to fill it out, because that's where the markets want to take out all them people that have bought there or sold there. For example, a fair value gap is a liquidation zone that is made by candles. If in a bullish market we want to see a candle push to the upside with wicks that don't overlap. If in a bearish market we want to see a candle push to the downside with the wicks that don't overlap. Okay, guys, so for example, I'll give you a one right here. Let me just find a quick fair value gap. Right, so here, like, this is on a high time frame fair value gap. These are definitely where you want to be looking. Like, if you find a high time frame fair value gap, can you see how this candle rejected? So we are currently on a downtrend, by the way, guys. Okay, so as you see, we're on a downtrend already. So you know, your lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. We kept going. Okay, and what did market leave? Right here, it left a gap right this wick and this wick. Left a gap right there in between the candles. That's usually a liquidation zone, and as I've told you, the markets will always go back there. As you can see, it went bullish, ran to there, and then flooded down. And that's pretty much what it does. You need to just spot out these fair value gaps and pretty much understand them. There are other things like order blocks, equilibrium, stuff like that. I will get more onto that. Also, news, guys. Like, news is very important. How to trade news, guys. I actually did write this down because a lot of people don't fully understand it. If there's a red folder showing, either wait for the news to hit and play out, or just do not trade that day. If you see CPI data, you know that CPI is going to hit the markets hard. So if you see anything with CPI, PPI, FOMC, and NFP, like, they will smash the markets hard, okay? So avoid the times they hit. If they are the only one or two red folders that day and the news comes out but doesn't move the market that much, you can trade that day, but you must wait at least 15 to 20 minutes before doing so. If there's an orange folder, still waiting for the news to hit and see how the markets are reacting that day, because sometimes with an orange folder the markets can be hit quite hard, but then sometimes it can be quite okay. So if the markets are okay, trade, but if not, I definitely wouldn't trade that day. But definitely wait about 15-20 minutes with an orange folder and see how the markets are reacting that day. Lower the risk management if you're going to trade, and only trade on the news days if you have great confirmation. So if it's an orange or if it's a red, make sure your confirmation is definitely good, and just lower your risk, because news can move really fast. And what I mean by that is, you could have the best confirmation, but you could have like a really tight stop loss, but market, say if it's on a bullish and that's what you've seen your confirmation, markets could just flood it down, because that's what news does, pretty much. Always avoid them. So pretty much I just said that: CPI, PPI, FOMC, and NFP. Use Forex Factory for news. That's where a lot of traders look. That's where I'll be looking, mainly because I just prefer that. I believe there are some more, but a lot of traders do use Forex Factory. I'm not advertising that either. Like, I'm not sponsored. I'm just saying that is a really good news place to look. Right, order blocks. This is exactly what I was just on about a minute ago. The order block is the last buying or selling pressure in the market before a market structure shift. If bullish, the order block is formed with the last bullish move up before it changes direction in the market. If the bearish, the order block is the last bearish move down before switching direction to the upside. Okay, so let's just find an example. So down, I just wanna get to know you. Ready to down. reggae. I'm trying to find like a good one for you guys. A good one. Slow down. I don't wanna get to know. I just wanna turn around. So that would be classed as an order block. This blue candle here. So right here from this top of this wick to the bottom of that. That's an order block. Why? It's the last candle before big push of a market structure shift. So obviously to know your market structure shift, that was the last high they wore and it just broke through. Okay, so that's market structure shift. And what did it do? So it's on a high time frame, for example, it came and tapped it, it rejected it, and it just pushed up. It switched the market structure shift, like it pushed up. From that, you just know it's bullish. It's got to bull run that shit. Pretty much. Why do I keep clicking that, guys? Right. So here, I've just read that. Equilibrium. Equilibrium is a retracement tool that does show you a lot. It's a retracement tool that allows you to measure a premium discount market for smart money to enter the market. How to market? If a bullish start, the equilibrium from the higher low to the higher high, and once it starts the retracement, you are waiting it to retrace to the 50% mark, which on equilibrium is 0.5. Equilibrium, you will find, if I believe it, where is it? Gannon box. That's equilibrium. Yours won't look like this, it'd be more different. For example, like, fucking, that's your equilibrium. Like, that is literally your equilibrium. What did it do? Come tapped your 0.5 and then shut up. So that right there just gives you confirmation. Order block, equilibrium. That's just two confirmations before market structure shift. So you had market structure shift. You swept liquidity because resting down there is just liquidity. So this candle here shot down, swept the liquidity, broke market structure shift right there, left an order block right there, equilibrium 0.5 smashed as well. So you've just got so much confirmation just right there in front of you, just saying like it's gonna move. So why the fuck are you gonna say, oh, it's about to sell, when it's just done that and just showed you all that confirmation? Always follow. I've done it again. Always follow your strategy, pretty much, guys. Executions. What are the building blocks? Liquidity sweep, break of structure, order block, fair value gap, equilibrium. What do these tell us about the market? You're just being told. Liquidity sweeps, potential for orders to be filled. I don't think I come down with a liquidity sweep. I don't think I spoke about that. So a liquidity sweep is where markets rest a lot of liquidity. So that's just where markets want to go and take it out. Pretty much what I just showed you. So for example, right here, that's the lower of the low. So before that was even there was nothing before here. So that candle before that were there. These didn't even break it, but right under here, people are just waiting for market to just go through and just take it. People are selling, just selling, People are like, yeah, I got my stop loss just below here, it's going to buy right here, let me just get in this buy quickly. No, your stop loss just got fucked. You've just been smacked by the markets, took your liquidity, they've just made money off you, you just got fucked. And what I mean by that is, say if you got in here, right, and you aim for that high, okay, didn't even get hit right on here, did not even get hit, okay, so well done, never got hit, but you had your liquidity right there, just below your wick. This is liquidity, that's just liquidity below that. That's where you stop loss. People are thinking, oh my god, it's going up, it's going up, it's going up. No, fuck you, liquidity is always going to get swept. That's the truth. Like, markets will always sweep liquidity. Like, that's just the truth of the markets. You're always going to get fucked there. before every higher high, rest liquidity. So, for example, here, okay, right above that wick, right up above this line, rest liquidity. Okay, right below this low now, rest liquidity. What did it do? It just went down and swept it. You know, that's just liquidity, guys. It's quite fairly easy to learn. I don't know why I keep clicking that. I'm just do-dally. Breaker structure, confirmation orders were fitted. Order block, price range where the orders were filled. Fair value gaps, price range with lack of liquidity, equilibrium, discounted price. How to calculate lot size. Use securities to calculate your lot size. This is on Google on why I use this. It allows S&P 500 and NQ1. That's what I trade. Some people might trade like US dollar, GBP, stuff like that, which use securities does, offer that as well. But these other ones that just offer that as well. But I use securities because it allows me to do S&P 500 and NQ1. How to correctly calculate the right amount. Type in your account size, the pair you are trading, type in risk 1% and then type the pips. What are your pips? So your pips when trading are these. So right here. So these number here, so 1687, they're your pips. And if you see when I move it, they change and they just keep changing. So that is tiny. It's 62 pips, but I'm on a high time frame, so it's actually more than you think. Pretty much that's your pips. Just always follow there. Where did I go up to? To find the pips, when you put your short indicator or buy indicator right in the middle of the random percent and the amount, it will say a number in the middle, which I just showed you. Usually looks like something 17.0, for example, when on a lower time frame, because that's where you will be executing, which will be 17 pips. With the S&P 500 and Q1, when you are calculating, instead of giving it a lot size, it will give you a contract size to trade with. So it could be like one contract, for example. The S&P 500 and Q1 are usually in points, so this will show higher numbers. So a lot of you might get confused with that, but it's quite fairly easy. You're going to open MetaTrader 5 and open the SPX and the NQ1, and then gives you your options below which you want to press details, and from there you're going to find contract size, which you will want to type in the calculator for contract size, units per lot. Pretty much I'm not going to show you that. It's really fairly easy. If you just watch what I've just said or just read over it again and just go on your MetaTrader 5 and just follow that, you'll just see it's really fairly easy to understand. Order block. The order block is the last buying or selling pressure in the market before a market structure change. Bullish. I swear I've just right, okay. No, I've already just said that, but on my other one, I forgot to put this down. Right. Weekly analysis. Check the news weekly to see where there's going to be news and what days to avoid. So, you always want to check next week. Say if it's Sunday, right, or a Saturday, look for what's going to happen on the week. So, from Monday to Friday, check your news. And what days to avoid, such as your red followers, mainly unless the markets are moving okay after 15 to 20 minutes, as we've already said. Check what the markets are saying on the daily and weekly. Also check price action movements, such as your fair value gaps, order blocks, breaker structures, equilibrium. Make sure the daily and 4 hour are moving the exact same way to say yes, it's going that way. For example, if the weekly and daily are showing bullish, make sure the 4 hours looking bullish, guys. I hope this fundamental video does help, because some of you are new traders, and I've genuinely took a lot of my time to learn this, just to show you that if you put your mindset to something, you genuinely can learn something. Like what I've just given you there, right, in just short sentences, could be hours of videos of watching. Like, please just screenshot them and just read over them, get it locked in your brain. You'll understand the markets instantly, and when you go on the markets and you look, you'll just see it and you're like, shit, he's right. But yeah, I hope you like this, guys. My name's Tom, and as I've said, OnlyFans creator to day trader, part 1. Thanks for watching.